Good evening, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. Apologize for the late post. As you can see here, it's 12:37 a.m. on Monday morning when I'm recording this. I'm actually spent this late afternoon and early evening traveling out to Las Vegas for this program, for a program that I'm participating in for day trading, as I thought I'd learn about that, and with a person named Gail Mercer, who has some interesting techniques I hope to learn looking at volume, ADX, and then, although I'm probably not going to day trade, I am curious as to how I might be able to bring some additional tools into my traditional swing trading techniques. So just to set the record straight, so we all know that the futures are up a little bit as we start today's call, and we'll see where they go. I don't know how well it shows, up 3.8 for fair value, and the S&P is 28.49 on the Dow, and the NASDAQ up 4.93. What a crazy market we're having. You can see gold is up a few pennies. And Asia, which is open, is up as well. So let's go ahead and see if we can't put some rhyme and reason to this market. Now, I always say this is going to be short, and I really want this to be shorter this week because it is 12:30, even though it's only 9:30 on the clock, and I got a big program for the next 3 days I'd like to be awake for. So let's go ahead and let's start. My email address is there. Had the opportunity to participate in a couple of user groups lately, and I'm happy to talk to anybody or respond to email questions. This is for educational purposes only. Any recommendation on the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, so you should keep that in mind as I talk. I am independent. I'm not affiliated with any software vendors or trading companies. I have nothing to sell you, although occasionally I will have some indicators that I find useful that I take. Some people have partnered with me and to have them written for the various tools that we use, and I paid for everything that I demonstrate. Got about a month to go. Actually, I can't add 2 months to go before the next HGSI workshop, and I just have a feeling that the market's going to have some volatility between now and then. If you haven't been to this, you need to go on the website, read about it. I can assure you what you may think is expensive at $1,275 is a bargain. And for that $1,275, not only will you get outstanding education over 3 days, but you'll be fed in water, breakfast, lunch, and one of the 3 dinners. And it's just a great opportunity, plus the networking is extraordinary. I can't say enough about it. I go twice a year, every October, every March. Been doing it forever, and hopefully Ian in the picture will continue to do these, and I'll have more opportunities. As usual, I'm going to try and do a 30-minute review of the market. I may or may not have a chance to jump into TradeStation and Quote Tracker, and I obviously, I'm taping this, so you don't have an opportunity to do questions and answers and suggestions for improvement. But every once in a while, somebody takes the time and emails me, and 90% of them are thank you and happy. But you know what? As much as I appreciate them, I appreciate the ones that say I should do something differently, because I do these for a number of reasons. I like to help promote High Growth Stock Investor, or HGSI, but it forces me to be regimented, and I'm a much better trader because I do these programs. That's really the bottom line. So the question to me is, are we topping, or is this just a pause to refresh and back to the bull run? My title, I think, was something like, was that it? Meaning, was that the big correction? I don't know, but it's kind of the same old as we've seen over the last several months. The argument for topping, seasonality. Most bad markets occur during August, September, October. And October is actually a positive month overall. August and September are supposed to be negative months. It's not acting negative, is it? We had a number of Hindenburg-Omen signals. Typically, those indicate a top. But as a note I sent to Ian, does it even mean anything in the land of quantitative easing? You can't argue against the fact that this bull is getting historically long in perspective. We know that QE is coming to an end. We know that despite the Fed saying that easing or eliminating easing and their buying of securities does not mean raising rates. We know that interest rates are rising. Just look at the impact on home builders. Not to be political, but it doesn't, I get the impression that Bernanke's tired of doing all the heavy lifting. And we've had a lack of congressional and presidential leadership to really take us to the next level from the perspective of the economy. A lot of leaders are getting whacked, and they're painful when they get whacked. And we still have a number of divergences. All of those are things that make me think the market's topping. Pause to refresh to me would be a little pullback, and then the market runs again. Why might I think we're pausing to refresh? I think that I saw this week, starting on Wednesday, that these indices turned around in lock, stock, and barrel at about the 50-day moving average. As I did my analysis this weekend, and I have two analyses that I do. I do a top-down approach where I like to look at the 10 or so best sectors, or industries rather, and specifically look at the stocks that are performing better than their index, the index of that industry. And then bottoms up, I collect, this week it was 500 stocks, and they're stocks that would have been in the MarketSmith 250 growth, the IBD 300, the HGS 100, and then the best of all the lists that I've accumulated over a week's time. So this week there was about 540 stocks, and as I flew over here, I flipped through them. And one of the things that really struck me is that interest plays are back in vogue, meaning I saw a lot of reversals and turnarounds in stocks that I thought would be interest rate sensitive, which goes against the comment over here about rising interest rates. So I saw REITs looked interesting. MLPs looked interesting. Utilities showed up a lot in that list. And the three things, one, REITs, MLPs, and utilities have not been on my list for quite some time. So they made it to fundamentally strong stock lists, and they have great yields. And then you got some accidental high dividend yields. Dow Chemical, one that is, we'll look at, I'm sure. We're seeing perhaps rotation to new leadership. Everybody knows from the board and everywhere else, if you listen, that gold, silver, coal, steel have all been moving. But they're moving from major canyons. They've got a long ways to go. And again, a reason for this to keep going is that reducing QE is not raising interest rates. HGSI, the website is here, highgrowthstock.com. I assume that most of the people that watch me on an ongoing basis have tried the free trial, but just in case you haven't, I'll just point out a few things on the website. And those include the fact that you have a free 30-day trial. I have not logged in, so everything I show you is provided at no charge. These include a community forum that's run through Yahoo groups, which is very useful. I prefer getting individual emails and not the accumulation at a nightly basis, because then you lose the attachments. I mentioned the seminar, which would be under the events tab, I believe, and you could see HGSI workshop. Ron Brown records a frequent HGSI action update, and I'll concentrate on how do I pick stocks and maybe a little bit about how I manage them. And Ron, on the other hand, spends more time looking at how to use the software, the structure of the market and the industries, and what's working now. The top-down approach we share, I'll probably spend more time on the stocks than he will. And then the Insider Club are a series of things, newsletters and webinars That's a paid service provided by Ian and Ron. If you go under the investment strategies and go under, for example, my name, you will see a series of webinars. Every week I do these. I post them on YouTube as well. If you go into the same product and you look at Ron Brown, you'll see his, he goes through spurts where you can see 6th, 7th, 8th, and 9th, 5th. Every day he did something, and then he took off a couple days, and hopefully we'll see something soon. I'm sure he's starting to get ready for the seminar. In addition, he spends a lot of time talking about how to utilize other programs, and this was Thinkorswim. And lastly, if you do a free trial or you got a paid subscription, please remember that you need to go to Support Add-ons and run these two files, the Filter Chart View Warehouse Combo Ranks and the Woodward and Brown Optional User Groups. And you need to do that if you want to be able to have the same charts and things show up. Futures, maybe we're going to head into a blow-off top. The other thing that to keep in mind, this is still summertime. And I just came down from Manhattan to Palm Beach this week before I came out to Vegas. It's dead. And by me saying it's dead, I mean that a lot of the investment professionals, we've got one of the senior VPs of one of the major brokerages as our neighbor, they're out on the Hamptons. We might not see volume pick up until September 6th or 7th, which is after Rosh Hashanah. And when you have low volume, you really have a setup for lots of volatility. So we all know, if you've been here before, I like to jump into TradeStation, look at the Alexander Elder, a couple of his things to get an idea of what the market is doing. So I'll start with the NASDAQ. I'm going to look at just a couple of things today. I'm going to look on this picture. I'm going to look at the color of the bars. I'm going to look at the Elder MACD, and then I'm going to look at the Ian's high jump indicator, which is coded here for TradeStation. On the price bars, green is a buy or hold, red is a sell or hold. You shouldn't be selling stocks when you got green. You shouldn't be buying them when you see red. When it's blue, it's sort of your choice. And you could see that there was a major gap down in the indices 8 to 10 days ago, and then turning red, blue, and now green and going back up. Upper part of the auto envelope, but green and rising. Weekly is still blue, monthly is green. So I would say NASDAQ looks very bullish. I'm bothered by the fact, now we'll see, we had a MACD divergence here where we had a higher high from here, from the left to the right, and we didn't get a higher high on the MACD histogram or frankly on the line. And that shows me weakness and perhaps reducing bullish pressure in this case. And that MACD divergence has bothered me. On this pullback, and now this recovery, we have not yet gotten above the zero line on the MACD histogram. So that'll be very interesting, I think, to see. Will the divergence stay in place, which would be bearish, or do we make a new high on the MACD as well? The high jump is a mathematical equation. In HGSI, the absolute number is plotted. It's the price, and then the distance between the price minus the 200, the price minus the 50, and the price minus the 17, all simple day. You take those three numbers, you add them together, and you plot them. What I've done is I plot big, and I've set this up, I believe, to be 200 bars. So I'm looking at, over the last 200 bars, how high, what percentage between 0 and 100 is my high jump to the highest high jump. And you can see here, I'm at 80%, which means I'm not near the top, I'm not extended. And at times that the market's extended, one might expect to see the high jump bar to be higher. So green was good, MACD divergence is bad, clearly not at the extended level as we saw a few weeks ago. You look by the way, I'm in hotel internet, so I make no promises tonight. You can see the Dow had a much deeper pullback, than the NASDAQ. Last 2 days painted blue on the price chart, still red on the weekly, blue on the monthly. Didn't make a lower low here, so I'm not sure what to make of this at all. So I don't think there's a divergence to the negative, a positive divergence there. But we'll see if it bounces back. In fact, with the MACD taking out the prior low, I might have expected to see the price come down further. And you could see from a high jump perspective, much less extended, not extended at all. So the Dow, it feels better. It's blue, but it's still in area of concern. S&P 500 instead of 30 stocks, but a lot of big stocks as well, versus the NASDAQ, which is big and has a lot of smaller stocks and a lot of technology stocks, which must be having some improvement. You could see looks about the same as the Dow, but not as bad. And by that I mean it's bounced up a lot higher, getting almost up to the mid-range. And you could see I had concern in here that we were making higher highs from here to here. And at the same time, with this higher high, we did not make a higher MACD. And clearly, divergences led the sell-off in the market, if you're a believer in divergences. So that's how I look at TradeStation. Now, that's a little piece of what I do at TradeStation. I do a lot of auto trading where I drop stocks in the list and they trade for me when the market opens. And then I do a ton of real-time scanning, looking for things like Bible gap-ups, real-time during the day, low breakouts, breakdowns, candle high, candle lows. I look for DMI crossovers, and I look for divergences intraday to, as I watch the market. Now, I don't consider myself a day trader because my holds are not designed to be just during the day, closing in by nighttime. But I'm more of a swing trader, but I want to pick things up at reversal time, and that's why I monitor this during the day. All right. Next step is let's also look at how the market did last week using some of the tools that I pulled out of HGSI. I hope you made money last week. Now, I know I sound obnoxious, and one of the complaints that I hear from time to time about HGSI is, how do we know it really works? You don't have an ongoing portfolio on a website. And we've had a lot of discussions about doing that. In fact, I had dinner with George Roberts and his lovely wife Debbie this weekend, and they were visiting Florida. And I said to him that I'm afraid to start running a portfolio. And the problem with running a portfolio is I'm not communicating with people real time. I'm not going to have things sitting out there that I'm not actively managing. And I can't predict what the market's going to do any more than you can. So for me to have an actively managed portfolio, I'd rather get to a place, and I guess it's cheating, where seasonality is not in my face. And perhaps during October, November, I'd like to build a portfolio out and keep one running. Maybe we'll build it out in some of the rules at the PV meeting. I can tell you another thing that scares me is it Dan Ryan, Michael Ryan, when the big O'Neill started a mutual fund, and he had a very good money manager managing that fund, it got clobbered. And it didn't mean that O'Neill wasn't right and his ideas didn't work. It meant that starting something when the market's against you, it's hard to go long and win. And so that makes, if he can't make it happen right, now long term it's done extremely well. But short term, it was tough to do. And I watched one of my friends, who I won't name by name, try to run a small hedge fund with a bunch of us using some of his proprietary indicators. And it's tough. It really is, and especially in the beginning. Over time, it starts to perform, but you often have drawdowns early on, which can be disappointing. So why did I say I hope you made money last week? Well, I hope you always make money. This has been an amazing run for growth stocks. I know over the last 4 weeks, 3 weeks I've been up 2 to 3% or more. 1 week I was down 2.5% last week. It hurts when I'm down, feels good when I'm up, but I'm up 10% in the last 4 weeks, basically, in my own portfolio. And I buy the stocks I talk about, and I also know that they did well because there's a tool called the Group Performance Analysis. And I do this every week, so I don't want to spend too much time on the basics. But I run, if I bought stuff at the end of the day on the 16th and sold them at the end of the day the 23rd, don't manage the list at all, equal weighted using an investment of $5,000. The S&P 500 over that period of time was up 0.46%. A couple of my favorite scans, actually, before I say that, let me jump up. The HGS 100, which is something I build out of HGSI, and when the market's pulling back, I often get less than 100 stocks, was up 1.78. So what that tells me is a 3-to-1 return on growth stocks, actually almost a 4-to-1 growth stocks versus the S&P. Now, mostly, we have a lot of small stocks, and as you saw, the NASDAQ outperformed the S&P 500 and the Dow. The IBD 50, about the same performance, 1.98. The GIF All-Stars, which I always end up with, the top 30 stocks, if you just bought them, were up 1.91%. My portfolio was up 2.18, so 5 times the S&P. Not too shabby, I'll take that. Now again, that's unmanaged. It assumes I didn't do any trading. The funny thing is, I put hedges on last Friday. And even with my hedges, my performance was pretty spectacular. But it's not necessarily me as much as it is validation that when high growth stocks work, you can make money with them. Now, a couple of other things I like to do, I like Bible gap ups. I have many different ways of getting them. You can see they were up also 2.3%. Green candle lows were about twice what the S&P 500 did. The interesting thing is the red candle highs did even better. Now, if you watch me long enough, you know that's actually a bearish scan, but it's really not. It's in a market that is trending down. Stocks that have a red candle high are often reversing and are going to drop. But in a market that is going higher and higher and higher, these are stocks that are leaders, and they just had a bad day. You could see that some of the leading stocks here, leaders with rising estimates from screens of the day, big cap leaders, bolting relative strength lines, top 150 relative strength. We'll talk about sprinters in a second. Breakouts with good earnings, they were some of the leaders. In fact, I break out my buy list, and although my buy list in total wasn't, let's see, where was my buy list? I know it's right in front of me. You can see it. If I say, Jeff, it's right there. Here it is. My buy list doesn't look so hot. It was up 110. But these are just a bunch of stocks that I put in the list that I think are interesting and I watch. It doesn't mean I'm going to buy any of them. Or I'll buy some. But look at sprinters. I talk about it all the time. 28 stocks. More stocks dropped than were up, yet the group was up 4%. Everybody can do sprinters. It takes 10 minutes to pick the best by looking at the top 10, 15, 20, or 30. What's interesting is breaking out stocks and bottom fishing stocks were the leaders. And I clearly think there was market rotation, some of the junk off the bottom moving up. And I always get a little bit surprised when I see my bear scans being leaders. Again, that kind of goes with the fact that perhaps we were seeing market rotation, some of the junk off the bottom. Now, let's just look at sprinters. This is built into HGSI. It takes 2 minutes to generate this list. There's no hocus pocus here. This is the list that was shown over the weekend, last weekend. and it's starting date, end of day on Friday, and sold on end of day this Friday. Now you could rerun it at actual opening price or typical price these days, but you know, I don't know if Monday's going to be an up or down day, and that's why I use the end of day on Friday to eliminate that impact. How many of you owned Idera Pharmaceuticals, Insight Corporation, Century Casinos, Gentium Spa, or Broadwind Energy? Each of these were big leaders. 32% for IDRA, 30% for INCY, 25% for CNTY. Kudos to the person on the listening that sent me a question about GENT, and I told them what I thought. It's a speculative play, but you got to have some of those in your portfolio, and they've got a number of near-term products in oncology. Well, one near-term and some not so near-term, and you could see up 16.95%. I had a great week, probably because of this stock more than anything else. It's a big holding of mine, and we'll look at it tonight. Alliance Fiber Optics Products was up 19.93. We used to on the web look and see how many stocks we could find that were up over 10%. Look at that. Trina Solar was up 32%. So there were a lot of good stocks this week. And this was my bottom fish pick, and it's actually got some solar exposure. It was up 6.7. And I still like Skechers. I don't know anything about their shoes. And it was up 6%. And you could see there were very few losing groups over the week. So this was a good week. Now, Ian's bucketology, if you think back a week ago, it was pretty bearish. If I remember correctly, there were about 30% of the stocks that were below the bottom band. And my prediction, which is not rocket science, is that if stocks only spend 5% of their time above or below the Bollinger Bands, that when you get too many above or too many below, the market's going to go the other way and fix that. And that's what happened. And you can see there are very few stocks above or below. The majority of stocks are below the midline in the Bollinger Bands, which is bearish. But I look at this as being much less oversold than it was. But it certainly, to me, is not, doesn't say the market can't go up. It also doesn't say the market can't reverse and go the other way. I mentioned the Hindenburgs. If you don't know what the Hindenburgs are, then go look it up on Wikipedia. The last Hindi that I had fire was on 8/14 in Edge Raider. I did have one on Wednesday, which was a crazy day, frankly, on my HGSI calculations. A lot has to do with what stocks you pick in. And if you see here on Wednesday, the only thing that killed it on this calculation was the number of new highs was not high enough to trigger. And the Hindi trigger is a, I guess it's almost folklore now, of a constellation of findings. There's some differentiation in the literature as to what those findings are, but it's a constellation of findings that, taken together, have a very high success rate of calling tops. Now, there's plenty of them, maybe, well, you know, most of them don't pan out, but there hasn't been a major correction occur in the last 30 or 40 years without a cluster of Hindis at the top. We had our cluster, but I'm not convinced we're rolling over yet. Now, in 2007, we had a double top, and we had a cluster at one top and a pullback. We had another top and pull back, so it's up head and shoulders, and it rolled over at that point. So clearly not out of the mess. All right, let's look at HGSI. I like to start with the warehouse view. And let's go down to Woodward and Brown user groups, 08, 15, 13, which are the group I said you need to download. Major Markets Plus, I like the top-down view because this basically looks at Force 2 and 13, so I'm getting it basically 3 weeks of the market on that piece, and 1-day and 5-day performance and some accumulation distribution changes. So it's all technical in nature. By combo rank, it shows me where over this period of time, which is more than just a couple of days, the strength has been gold and silver and small caps. No shocker, I think everybody knew that already. And the weakness, the dollar is weak. Volatility, utilities have been weak, but I'll show you one or two perhaps that tell me that things may be changing. But the big stocks were clearly weaker. So let's just take a quick look at some of the indexes, and let me play with the S&P 500 because I know you've seen it before. Remember, I do this to help me, so some of the stuff that I do because I find it very useful. And I'm just going to draw on the charts. And so let's tighten this up a little bit. Let's get a little bit more data on here. So we all know we corrected from September into the middle of November, and we corrected, my bad, hold on a second. In 44 days, we corrected 13%. That hurt. Then we had this lovely rally that if you just stayed long and not managed your portfolio and you bought ETFs 1x the S&P 500, you're up 24% over 192 trading days. By my calculations, that's about 3/4 of a year. So that's a huge run. I mean, that would put us on a 30% run rate for the S&P 500. So I say long in the tooth, that's part of it. But what we've really had are a series of micro corrections. We went from bottom to top, 7.7% in 23 days, and we pulled back and held right above the 2-day moving average of 3.3%. Followed that by a run over 34 days of about a little less than 10%, and then a very quick pullback, holding above the 50 of about 3% in 4 days. But those were 4 painful days. Then we ran up 7% over 30 days. And then you notice the descent, the decline happens faster than the run-up. Pull back 4% in 5 days. Each of these have been extremely painful. And then what happens? We run up 9.8% in 24 days. Then we had our deep pullback of about I get 7.3 now, sometimes I get 7.7, occurring over 22 days. And then from that low, whoops, I don't want that one, to the top, was up 9.6% over 28 days. And then we pulled back 3.9% over 13. So what are we probably due to pull? I mean, do we get another 9% run up? I don't know. I've heard some people that I think are smart came out and said 16,880 on the Dow. That's a big move from here. But the pattern has been rise, quick pullback, rise, quick pullback, rise, quick pullback, rise, not so quick pullback, rise, quick pullback. We're going again. And what I like about the setup that we have is this 50-day moving average of some, I'll use Gil's word, porosity, has been great support. And we're there again, which is a good time typically to buy. Here was that Wednesday Hindenburg. I think it was either Wednesday or Thursday, which I thought was a little strange. It must have been Thursday. Let's look at the other indices. We look at the Dow. as we saw in TradeStation, much weaker than the others. Whoops, wrong way. But it too looks like an inside day on Thursday, and then gapped up on Friday, and not really a doji and not really a hanging man, but gapped up, and everything up here, or most of the things up there, are red. I'm going to close my TradeStation because it's apparently eating up a lot of bandwidth. No shocker, so let me just do that. Great. So the Dow pulled back, but is it setting up? I don't know. I don't like the fact that it undercut the 50. You could see the last time it did the same thing. It failed the first time up and then made it through the second time. The the NASDAQ should be the stronger three, and it is. You could see it didn't even make it down to the 200. It's now back above its 8-day and its 17. And a DI crossover, had a kahuna on Thursday. And the Bongo Daily, which flashed red because of the pullback, is still red, but the weekly is green. So all clear right now on the NASDAQ. The Russell 2000, since I made money, I bet Russell looks good because small stocks are the Russell, and you could see a pullback, bounce off the 50 and moving up again with two kahunas in the last couple of days. This looks just like the other pullbacks, with kahunas at the bottom and the market runs. It's time to stop. It's time to pull back. It's time to correct. It's long in the tooth, but you got to trade the market you got, not the market you think you have. Now, I would say I'd feel a whole lot better if tomorrow I see Eureka showing some follow-through day in HGSI terms on the NYSE. What has also worked well, let's look at gold and silver. Junk off the bottom, but they're moving. Here's the spider golds from bottom to now. If you were smart enough to have bought on the green candle low, it's up 17.6%. I remember we talked about it probably back here when it showed up at one of the top groups, and I was skeptical. But I went and bought Nugget as the GLD broke above the 50, and I've had a nice return over the last couple of weeks of 3X ETF. Gold can run all the way up to its 200-day, and it seems to look like that's what it wants to do. Silver had a great week last week. Looks a lot like gold, and the same thing. From junk off the bottom, it is up 31%. Now, to be fair, for the ones that don't love gold and silver, if I go back to 9/11, you have a drop of 58%. So yeah, gold has had a nice run, and silver's had a nice run, but they are really coming back after a deep sell-off. Again, probably runs up to the 200, had a pocket pivot, which I guess in Gill World that would potentially tell you a follow-on buy, maybe something like AGL if you want to play something that has leverage. Real quick look at the VIX and the dollar, and then we'll move forward. Big bearish day on Friday on the dollar. Pocket pivot to the downside, which I'm not sure is validated. I don't hear Gil talking about it much. But closing right down at the 8-day exponential moving average. The dollar has not been able to have a sustained rally and get above this point of the 22.90, 23 range, and it doesn't look like it's going to do it this time either. Obviously, strength in the dollar is not great for stocks. Although of late, it's been the commodity stocks that have suffered, and the dollar and the market have gone up some together at times. Volatility also struggling at this 200-day moving average. Last week, I wondered whether it was going to run up or pull back. It went sideways, starting to pull back, but getting down to levels of complacency. So how do you get bearish in this market with all that I just showed you? It's tough for me. The market looks like it wants to go up. I'm going to play the market as it wants to go up, but I'm going to be very skeptical about how far up it's going to go because, frankly, it's run a long way already. and we're in a bad time of year. Industry groups, you see there's 146. Talk about bullishness, we've got 83 of them are now positive on forced 2-day and only 9. So this has given me really just a 2 or 3 day picture of what's moving in the market, and the things that move it are either price change or volume. And volume, I think, is frankly a bigger component. So we'll skip the index of the index. Let's look at the top 10 or 11 real quickly. Now, one of the things that bothered me is I only like to buy things typically that are above the index of the index. So I want the leaders. There's only, most of these we're going to look at, you're going to find that there's not a lot above the index itself. Insight, I'm going to look at some of the ones that I like out of this group. Insight's an interesting story. They have a first-in-class drug called a I can't remember if there's 1-2 inhibitor, and it treats a relatively uncommon blood disorder. This week they released some results of a trial in pancreas cancer, which frankly, nothing works, everything fails in. It's one of the worst cancers to get, and they had positive data albeit an early phase trial, and the stock just took off. They got a great leadership team. Some people that were there during the heyday of Amgen are involved in some of the running the company. They had a viable gap up. There are rules from Morales and Katcher about how to manage a stock with a viable gap up. I would let it form its flag and see if it breaks out again. I think it moved very fast, very far, and I think that there's risk here at this levels. But it tells you what happens with these biotechs on news, and even news that I wouldn't have thought was that much of a catalyst. Phase 2, which is a middle-of-the-road trial, being positive. But a big gap up, viable gap up rules in play. A couple of other stocks. Celldex in and out of, another early story. But take a look at this move. I love the sideways pattern, 2 kahunas coming in last week, and we learned from Ian when you see multiple kahunas to get interested, and you had over a 10-day, 8-day period of time, 3 kahunas and a pocket pivot breaking out here out of a squeeze of the moving averages, everything turning green. I think Celldex possibly runs some more. It seems to be a momentum darling in this market. One of my favorites is Gilead. Last week I said what a great time to buy, 1, 2, 3, 4, 5. So you bought on the open. On Friday, on Monday, you had picked up a couple of points, although not much movement there, as it pulled down to a natural, in my mind, buy point of the 50-day moving average. Still like Gilead a lot. Onyx make news on Monday. You probably are aware it's been taken out by Amgen at $125 a share. Traded up as high as $135 after an initial bid of $120 by Amgen when people thought there'd be a bidding war, and that didn't really materialize. But at $125 a share, it's over 10 times next year's revenue. I think it's just a huge number, but it really it's great for Onyx shareholders, and I think long term for Onyx, for Amgen shareholders as well. This is Gentium SPA, and shame on me. Gap up, pull back to the T-line, 8-day moving average, moved up, pull back, and it went up again this past week. Somebody laid it up for me, and I didn't take the serve because it doesn't have a much revenue, and it's an early stage company, although obviously it's got some sales going on. And they really got 2 stories. They have, frankly, boring products where they provide some of the basic ingredients for heparin and urokinase, 2 very generic products. And then they have a preclinical line, and it's a preclinical line that got people excited. Something to watch. I guess that's enough of my bantering about these stocks. Here's ACAD. I know several of you owned it. I've been in and out of it. It's setting up in a nice place. I mean, this is the kind of stock that I put in my auto trading program, and I look at it and I say, we open up the data window, closed at 2063. The high of the day is 2081, and the 200-day moving average is at 1924. So I might put in a buy stop at, excuse me, I don't want the 50-day, I want the 17, the green one. Let's see. It's at 2023. I might put in a buy stop above the high of the day, and then set my original stop probably at the low of the prior day, which was 2020, with the idea that I think the stock is setting up to take off, and I'll get stopped out if I'm wrong, and I won't take the trade unless it takes out the high of Friday. But I like the sideways pattern, and what I like about sideways patterns is it's easy for me to pick my stops, and I don't have a wide stop there. I don't have a 10% stop limit. I have about 4 or 5%, and I only buy it if the stock trades up. All right, you might see a lot of these stocks move up, frankly, tomorrow because of the Onyx purchase. You could paradoxically see them trade down because Onyx didn't get as much as they wanted. Above the system software index are two, Microsoft and VMware. Let's look at them. This would be my biggest nightmare. The last thing I want to do is be a CEO of the company whose stock has been doldrums, and then they get a Bible gap up because I announce I'm retiring. Now, I want to know, what did people know the day before that announcement came out? You had a gap up that took out the 8-day exponential, you had a DI crossover, and you had a kahuna. So a real-time HGSI, which sometime in the future we'll actually have, could have signaled you by end of day that something was going on there. You probably got a pretty good bottom put in at this level with several touches. And, yep, it took off. But again, it took off because the CEO is retiring. VMware, this is a stock with an interesting past. It's had big run-ups and then pullbacks. Looks good. I mean, it's right. It's breaking off. Big kahuna, pocket pivot, everything is green. Looks like it wants to run. It makes money. It has a multiple of 44. It doesn't pay a dividend. And there's a reason why the stock made it to the top of the list. It looks pretty good. There's some others there that look good, like that people might have, like Quihu, that have been a big momentum play. Auto manufacturers, can you say Tesla? Tesla, at some point Tesla is going to pull back, and I can tell you what that point will be. That will be the day that I go long Tesla again, because I'll be calling the top when I go long. I don't know how to play this stock. It's a momentum play. Maybe I buy it on the next pocket pivot if it gives me any kind of a pullback. Great stock. If you own it, God bless you. You're making a ton of money. You notice that it's starting to have earnings per share coming in. That may propel it higher. What's left? GM pulled back a little below the 50. It's got some earnings per share coming in 2 quarters. Ford Motor has been a big leader, same exact pattern, pulling back to the 50. So the leadership here is clearly Tesla. I'm going to come back to automobile manufacturers because it's a theme that I love, which is auto parts. And they're looking good again, guys. Gold, we already talked about gold. You can predict that no matter when I run, the gold is a good story. Then American Barracks and Newmont Mining, among others, are going to be right on the top. And what do you see on the top? American Barracks, their earnings per share growth suck, although they do make money. And just like the GLD junk off the bottom, nice move, could run up to the 200-day moving average. It'll be interesting to see how they do beyond that. Newmont Mining, similar picture. Now, I'm going to show you Cleveland Cliffs, which is not in this group, but I don't know thing. I'm one of you. But things just happen. Is it a magnet? Is it fate? Are all the shorts waiting when the stock hits the 200-day moving average that they dump the stock? And the gold's going to do the same thing. It's going to run up to the 200. It's going to fail the first time at the 200. It'll pull back to perhaps, as you're seeing here, the 17-day. And it's going to set up like Cliff, I think, is going to do and try and run again. And we'll see if it can get through on the second time. It's just a pattern of support and resistance that continues every time. Oil, gas, and exploration. With oil the price it is, natural gas starting to rise, of course these things should be at the top. So I guess you give it Aubrey McLennan, or whatever the guy's name is, and the next thing you know, Chesapeake is a big leader. It had a great week, up 5% on the week, and you can see a chart that, here's another chart, I'll go to the weekly, that was not happy until they announced that they're getting rid of the CEO sometime back in here, and you can see the stock did a big turnaround. He had some funny financial side businesses. Now, reality is he did great for shareholders. They made a ton of money over the years. He gave back a great return, but he got forced out of the company. He's actually now buying up shale properties in the north, in the Midwest. So he'll be back. And you can see Chesapeake had a viable gap up, perhaps on Friday. Everything is green. Earnings per share growth extraordinaire. Pays a small dividend, multiple much less than its earnings per share growth. I like to buy stocks that look like that might fit your risk tolerance. Apache's always been a leader, and not quite a leader yet, although it's had a nice move off the bottom, breaking the 200. Apache's probably a better company. I like Chesapeake's chart better. I'll point out a couple that I liked. Western, I think, is a nice company. It is at a natural buy point. You've got a squeeze in here with the 17-day and the 50 and the 8-day coming together. A DI crossover, a break above here. A breakout might be compelling. It's got good earnings per share growth. No dividend, unfortunately. There's a lot of noise about, well, you know from before I like Cabot. I'm still long Cabot. Love the base. The base became flatter with the split, from an optical perspective. But you got a stock that's in a slow uptrend, had a pocket pivot and a kahuna. On Thursday, everything is green. They got nice earnings per share growth and nice revenue growth. And then one gets a lot of attention in the newsletters is Kodak Oil and Gold. And, the old Ian story of you see a lot of kahunas, pay attention. A lot of people talking the stock up. It's a junior oil company, but you can see some major growth in revenue. It's got earnings per share growth. Everything is turned green. 2 kahunas Thursday and Friday. If you look at it on a weekly chart, you'll see that it struggles when it gets to this level, and you might want to wait to see if it can break out above there. But totally different company, different stock. But Diana Shipping, get me to the daily here. This one has been struggling in a similar range, and it broke out of that range this week. And I think this one runs from here, and I think that KOG, if it can break above its prior high, has a good chance of having a big move. And it might be a reasonable, cheap energy play to make. Continuing down, communications equipment. Here's that AFLP, which I mentioned that I had a nice position in. Easy. Pocket pivot off the 50. The next day it took out the 17-day moving average. On the day it took out the 8, it had a kahuna. It showed up on my scans. Took a nice position here as it broke above the open on this day after I saw the kahuna and the pocket pivot the night before, and a nice run. Why was it easy? Because I had colors. I had the color of a DI crossover, pocket pivots, and a kahuna crossing over the 8-day exponential moving average. So this was a nice play, and I'm an earnings lover. And It's a small company. Look at the revenues, minuscule. But I gotta love the earnings per share growth. And it only trades 376,000 shares. So Gallardi could buy the whole float, but it's in a great move. A young gun and one that you might want to watch, although it's going to get extended soon if this continues. There are other good stocks in this. A lot of people like you. Whoops. Well, it's not the one I wanted, but I like this one. Finisar, great earnings per share growth coming up. You're going to drop 10 cents and replace it with 45 cents. If you got a multiple that's high, it won't stay that high. It's got to be worth $5 or $10. You look at the earnings per share growth coming in. You gapped up here at the Bible gap up. You got stopped out here, down to the 8 and the 17. I think the stock pops from here. I like this stock a lot. The one I was going to go to is the one above it. Great earnings per share growth. This has been a momentum lover. It had a Bible gap up, pull back for a day, running again. Don't know enough about the company to say it's good or bad, but this is a group that's moving. A lot of things in there. All right, let's go back. For those who haven't been here before, I talked for way too long, but this is what I do. I go through the top groups, and then I'll do a couple of things at the end and say goodnight. The banks, Bank of America. Why would you not want to own Bank of America? They've already been out and said that rising rates will not be bad for them. There's some litigation risk always with the banks and too big to fail. I sort of get stuck on this. 100%, 68%, 866%. Multiples high for a bank, maybe at 26, thinky dividend. But these stocks are, I think, are in a major. I think these guys are in a big move. I've got a big position in Bank of America. J.P. Morgan's always been best in class. It's pulled back harder. I think Bank of America right now looks a whole lot better. I think J.P. Morgan's got some other whale problems to deal with. Internet retail, Facebook. Should we all be buying it now? A lot of analysts came out and said the answer is yes. You had a Bible gap up. You had a big kahuna. A pocket pivot, a Bible pocket pivot, I think. Short base, pocket pivot, kahuna. A little bit of volume came into the stock. Earnings are coming in. I think it's probably time to own Facebook. Frankly, it was a lot of time to own Facebook back here. I don't know why I didn't buy it. I looked at it enough times. What else do we have? Netflix. Let me go back there. I mean, is it time? Should we be in Netflix? All right, what did I do wrong? Right click, change industry group. All right, I did something. Let me go back in here. Do I want to be in Netflix? If I'm not in Netflix, I have to look and see when earnings are coming out. But you had a couple of kahunas, a zillion pocket pivots come in. Everything is green. The stock has got great earnings per share growth. Yes, it's got a massive PE, but when your earnings per share growth is 3 times your PE, eventually your stock's going to go up and your PE is going to drop at the same time. I think Netflix looks very compelling. It's easy to be bullish this week. There's a lot of good things in this market. Now, that might change tomorrow at 1 o'clock in the afternoon. Questcor. Gosh, this thing is such a sell-side animal where they hammer the stock. But you know what? Look at this stock. Is it late stage? Let's see. That's 1, 2, 3. I mean, is it third or fourth stage? So it's getting a later stage breakout. It's got great earnings per share growth. It's had a zillion analyst upgrades. Everything's green, a number of pocket pivots. Just be careful with this one because there's a lot of shorts in the stock historically. And 15.9 million shares, so about a third of the outstanding shares, between a third and a quarter, So about 30% of the outstanding shares are short. So let's see, 15.9 million. It trades 1 million a day. So you got about 14 days of short interest. So any good news, this stock keeps going up and the shorts are getting spanked. But there'll be a sell-side analyst who's short the stock that's going to come out with some bad news. You can count on it. I've been very bullish on Jazz Pharmaceuticals. It's been a big stock that actually has, but more importantly is located in Ireland, which makes it a tax haven. And somebody, there's been talk about speculation about this company being bought. On the other hand, it's growing 20 times, trades a multiple of 16.8 in a sector where you look at something like Pfizer, which becomes accidental dividend plays every time the stock pulls back. And it's pulled back its dividends 3.4%, but more importantly, where's the earnings growth coming from? Yeah, it looks like it's going to get excited. All the big players have these new PD-1 antibodies for cancer. And unlike a lot of the small companies that have drugs for niche diagnosis, these PD-1 antibodies, PD-L1 antibodies, may revolutionize treatment of things like lung cancer. So there's a lot of opportunity for them, but they still got to earn it. And then just go back to something where I'm feeling like I'm not helping you on, but I still like Santeros, SNTS. I think it's telling me it's time to buy again. Why do I say that? Because everybody else is selling it. I got to pull back down to the 50. Every time it's hit the 50 in the past or got close, it was a buying opportunity. The stock makes money. It's got great earnings per share growth. Sold off last week on an analyst downgrade. It's at the 50. I think it looks very attractive. The other stock that I like in this world that's going sideways, hasn't blown up, but hasn't gone anywhere, is Watson Pharmaceuticals. Had a little move up, going sideways. I'd watch this one. It's got great earnings per share growth, and they're doing a lot of good things. So I'm getting tired of the longs. Let's see if there's anything else I wanted to point out. Well, I got to point out this one. Here's another stock that I think you should be owning. I own it, but I'm not selling you my shares. Halliburton. This is a stock that got hammered, and if you were contrarian and thinking long term, you would have been buying it at $25 a share after the Horizon BP disaster. This was probably back here at $22, $23 a share. But this stock is back from the dead. It's got earnings per share growth coming into the stock. It's clearly the dominant player in its market, and it looks good. It's got a bunch of pocket pivots, a kahuna, everything is green. High jump's not at the top, and it's got earnings coming into the stock. See if there's anything else I want to point out. It's not up at the top, but auto parts. A lot of these made it to my screens this week. So I'm going to point out one that I haven't talked before and then one that I still think very highly of. These guys have been doing well. Axle is a very small company. It's tied to the auto industry. When I say small company, it's got a market cap of $1.5 billion. Okay, that's a small company. Look at the earnings per share growth going to come into this stock. You want a way to participate in the auto industry and you don't want to buy Tesla? You buy Axle. I've been saying this now for 4 months. It's had a huge move up. It's gone based, pulled back to the 50, going to run again, and it unfortunately doesn't pay a dividend. And there's probably an opportunity for this stock to this company to be taken out. It's got about 8 days of short interest, which I guess isn't that much. The other one that popped out at me that I hadn't heard of before, so I haven't done any research on, is Motors of America. And why do I like it? Because it reminds me a lot of Axle. Tons of earnings coming in, losing. You can see the major reduction in revenue. And now all of a sudden, look at the earnings per share coming into the stock, cheap stock, and I think it has an opportunity to take a nice run like Axel did. Let's look at the short side, although I don't spend much time looking at shorts, but the groups that, whoops, that's not what I wanted to do. The groups that are short, home building, and it was pretty clear when I did my review from the bottoms up that home builders are just trashed, and a lot of the plays around home builders, including the lumber companies, although Lumber Liquidators has done remarkably well, but construction materials you can see is down, industrial conglomerates, home improvement, Home Depot had sell-off after earnings. All right, so I'm getting tired. We've created, hopefully you've kept track, a nice list of stocks that look good, or you can go do your own. Now let's do a couple of quick things. Let's look at the sprinters. So if you hit Warehouse View, and you go into, I'm going to try and use the same things that you have. HGSI Strategies. Pick the one that you just downloaded, August 15, 2013. Go down to Woodward and Brown Archive. Go into Reference Library. Go into Miscellaneous. Go into Sprinter One Step with Bongo. Change this to all securities, which I should have done already. You have 40 stocks. So I'm going to call these, I'm going to do this real quick. I'm going to make a group from this. And I'm going to call it Sprinter Bongo Web 825. Facebook, we already looked at. Questcore and Jazz, we already looked at. Insight, we looked at. LinkedIn, I could have looked at. Gentium Spa, we looked at. So a lot of the stocks we've already looked at are here. Now this is more, most of the stocks have green group rank and relative strength, but this is looking out a much longer period of time than the Force Index. Now, let's say I don't want to look at 40 stocks. I want to find the ones that are pulling back. So you notice that we changed to this group automatically. And I'm going to go in here, and I'm going to go into Elder Force Index Rules. And I want to find stocks that are in uptrend. So that means the 13-day force is green, but they're pulling back, so the 2-day force is red. And I see there's 3 of them. So I might just want to look at these 3 if you like pullbacks. So this is identifying the best of the best strong stocks that are pulling back. Now, it's not ready for me to buy this yet, but I might want to watch the stock if it breaks out perhaps above this high here from the last 2 days, Lumber Liquidators. Repligen has been a good performing, starting, we'll see, you watch and see if it pulls back. Visteon is one of those automobile manufacturers. So not much of a pullback in either of these. That's because the last couple of days everything's been moving and the sprinters are the best stocks. But you can take this list and you can run all kinds of different searches on the list to help reduce the number. But bottom line is, you don't have to worry about that. Just take run your Sprinter Bongos, and again under miscellaneous Sprinter, and go through these stocks. So all I had to do was to pull this list up, skip everything else. That's not how I trade. And we would have seen Facebook. I already said I like it. I would see NetEase, and I would say this is a very nice lower left, upper right. A little bit too high on the high jump for me. Had a Bible gap up. Maybe it's going to take off again. It might be perfect for some of you. Omnicare is a nursing home services provider on the pharmaceutical side. Lower left, upper right, pocket pivot in an uptrend, probably viable. Kahuna, tons of volume, probably had earnings. Don't like the forward earnings per share growth, but worth a look. Questco, we already said we liked it. Jazz Pharmaceuticals, already said I liked it. Insight, already said I liked it. You notice one thing, all securities, Sprinter, Bongo, One Step, and you find good stocks. The casino stocks have done very well, especially those with Macau. Here's MGM, lower left, upper right, bunch of pocket pivots. Skechers, they make shoes. They've got great earnings per share growth. They're showing me a bunch of pocket pivots, but they're kind of extended on the high jump. LinkedIn, pulled back, been a great mover. I don't understand why the stock is so expensive, but I don't know anything because I missed most of this run-up. Century Casinos, as I said, the casinos have been very strong. Don't like this one with a big doji here, but it did have a Bible gap up. I guess if it trades above that tomorrow, I should consider it. MPEL is a casino stock that I own. It has a big Macau presence, all green. Point here is very simple. Go into all securities, run your Sprinter One Step with Bongo on a nightly basis, look at the top 10 or 15. If there's some that are really good, put them into your portfolio and take out the ones that are your worst performer stocks in your portfolio. You will make money. Lastly, I like to do a very quick GIF. This has turned into a very long call, despite the fact it's now 1:48 in the morning here. And so I would go into Tools, Group Inclusion Report, and I'm going to do this with only the smart groups, and I'll do my usual. I'll look at Morales and Catcher, I'll look at Bible gap ups, I'll look at pocket pivots, I'll go into Woodward and Brown, I'm going to do best criteria, ERG 240, World Stocks, HGS Leaders, QEPs, stocks groups moving to the upside, and EPS approach strike near 52-week high. Make group for report. I want the top 10. We'll look at those, see if there's any new ones. We'll call this Web Gems, 825. We're going to hit OK. And now it's going to find which stocks are in the majority of the lists. And it'll give you a nice little HTML file. Why is it a nice file? Because one of the things that I do is I take this nice little HTML file and I import it into an Excel spreadsheet, and I'm able to track these, which are the best stocks. So I did these off of a lot more lists, but let's just take a look at the top 10 of these or so. All right, so let's flip this down. Let's go into Web Gems. Gave us 9. Let's look at the warehouse view, and let's see another shortcut to find some stocks that we would have liked. I've already looked at Facebook. I looked at Questco, Green Mountain Coffee Roasters. When is this company just going to give it up and be done with it? It's not yet, despite all the intermittent challenges of Starbucks and other competitors. Lower left, upper right, everything's green. Bunch of kahunas earlier in the week before it had its big move up. Pocket pivot on Friday, very strong. Do your own research. I don't know enough to say. AFOP, that's when I made the money on this week. Lionsgate, I sold it here. I wish I would have kept it. I'm probably buying it again. Great earnings per share growth. Longer term, everything's green, a pocket pivot on Wednesday. InvestNet, talked about an IBD over the weekend, which is probably positive for the stock. Kind of a nice saucer pattern. I don't know if it's going to give me a handle. Everything is green. You know, if we go in Ian language of the 405, there was my buy point when it broke above that 8-day exponential. It's amazing how all these different rules come together. I wish I was back in it, or in the stock, and I'm strongly considering it. Love the earnings per share. CalAmp has been sort of a slow incline. Spotty earnings per share growth, but a similar pattern with the saucer. Maybe it's even giving you a handle. I don't like this one as much, all green. Don't like the earnings per share as much. Repligen, we looked at it before, I think in the sprinters. Santeris, here we go. Love this guy. Pull back to the 50. Set your stop a little bit below the 50. Put a buy stop above the high of yesterday. And if the stock breaks out, you're in. If it drops below the 50, why would you want to be in? You might want to give it a little bit because of the porosity here. And that's it. So 2 shortcuts, Sprinter One Step with Bongos and the GIF, and long-winded dissertation of the market. Buy the market we have, not the one Jeffrey thinks we should have or you think you should have. This is an interesting time in the market. I'm long, I'm cautious, but I'm getting rid of, unless this has a big turnaround in futures over the market, I got to get rid of some of my protection that I've left on because it's killing my performance. I'm joking about killing, but I don't, I'm probably have too much protection on until I see a signal from the market otherwise. Have a great week. I'll do this again next week, maybe live in 2 weeks as a pre-October session, try and get people psyched up for the meeting. Good night, everybody, and thank you.